Hello, chart watchers and Decision Point faithful. Welcome to this Monday, April 26th Decision Point show. My name's Erin Swenlin. My father is not joining us today, but I'm sure he'll be back next week. We are here to educate and inform, and of course, show you the charts that we think are the most important going into this week and what you should be aware of. Lots going on. Of course, we have lots of big earnings that are getting ready to be reported this week. Lots to talk about. So we're going to start off actually with our SPY and an indicator review, just so we can see what's going on with the market in general. That's always the best place to start when you go and do any investing. I'm going to cover our golden and silver cross indexes. Carl scratched on these, just scratched the surface on these last week. So I wanted to really talk a little bit more about them and how we use them to define participation. So what we're looking at is, you can see price movement, you can see what's going on top of it on the surface, but you want to get underneath and see how many are participating in whatever rally or decline that you have, because that's what's going to help you be able to know what investments are going to be better, whether the market is being supported or not supported. But anyway, I'll go into that a little bit more later. We did get a sell signal on the dollar, so I'll be going over that. And then I want to cover natural gas. I covered that last week, but I wanted to give everybody an update and then talk a bit about renewable energy, because when I hit capitulation with renewable energy, apparently that was exactly the right time to buy. So anyway, we'll be looking at what's going on in renewable energy. And I have a couple of stocks in that area that you might be interested in. And those will come in as our diamonds of the week. So we'll have lots to look at the end of the show as well. Before I get started, though, I did want to let everybody know I'm currently running a special for my trading room participants and our show watchers. If you come on to our website and you subscribe, you will get half off your first month. So whatever product it is you want to get, half off that first month. After that, you can say, no, don't want it. Just let me know. We won't charge you if you don't want to be charged after that. But more than likely, after you have that first month at a half price, you're likely going to want to continue with our services. Additionally, I wanted to make mention that April 5th, you can join me in my free trading room, and Greg Schnell is going to be a guest of mine. So we'll talk a lot about what's going on in the market, in general, but we'll get his insights on how he trades and some of his trading strategies, which is what I do in the free Decision Point trading room that I have on Mondays. Just go to our homepage and you can register there. So right now our Decision Point sector scoreboard is all green. That means that for each of the sectors, the 50-day EMA is above the 200-day EMA. It's on a golden cross, so that's why these are all buys. The intermediate term trend model, the 20-day EMA is above the 50-day EMA, and that gives us a silver cross buy signal. And so we have all of the sectors currently on buy signals. Certainly when you have all your sectors on buy signals, the market is doing well, it is healthy. So this is good to see as a foundation, if you will. So let's go look at some of these charts that I think you're going to be very interested in. All right, so the first one, of course, I open with this in my trading rooms. We open with it every time with the Decision Point show. This is the SPY. It's a 5-month candle chart, and we have various indicators below. But what I wanted to point out just today, right now, is price action. We were not able to set a new all-time high intraday like we did on Friday. And you can see that price is now stunted right there at those all-time highs. If I look at these indicators, the PMO is turning up above its signal line, and that would indicate to me that momentum has shifted to the upside and we can expect a breakout. I'm not so convinced, and there are a lot of reasons why. So first of all, today we did have a positive close, but we had low volume today on that move. We are seeing the OBV in decline right here. So we have got these higher tops right here, a higher top, but we're not seeing that on the OBV. So there's a bit of a negative divergence going on there. The VIX, it's a measure of sentiment, what we like to follow. And right now it's starting to get very much squeezed between its Bollinger Bands. And the only way those Bollinger Bands are going to expand is with a lot of volatility. And volatility generally is to the downside, not to the upside. So as these continue to be squeezed, it's good as long as we can stay within it. You can see what happened back here as we stayed within it, even though we had the squeeze going. We just need to be aware that it is starting to get squeezed, the VIX is. We're not seeing a whole lot of movement as far as complacency and fear because the Bollinger Bands are so tight. And right now it's sitting on its EMA. It sadly is not telling us a whole lot of information. So let's go ahead and start looking a little bit further. This is the 1-year chart for the SPY, and you can see we are in a nice rising trend channel. We continue to bump right up at the top of the channel, but we start to look, once we get the bump, we're starting to look for when we are going down to test the bottom of this rising trend channel. So we haven't seen that. The 20-day EMA is holding up just fine. I'm just not seeing the deterioration necessarily to be extraordinarily bearish right now. The RSI is still positive. And like I said, underneath the surface, there are a few things going on that I'm not happy about, but let's look at some of the things I'm not happy about right now. All right, so the STOs, I just got the readings to come in today and we are seeing them move up, which I like. I think that's a good thing for the market. It tells us that more than likely we're not going to be in for a big decline tomorrow when these indicators rise. They're pretty great for short term. And the problem I have is they've been very flat. We really haven't gotten any spikes on them, if you will. We haven't really seen a lot of confirmation for what's going on. It's just been very volatile itself, which is somewhat unusual when you look at the history of this particular indicator. So right now they're mixed. They're not that helpful to me. So now I have to fall back on some of my other indicators. And that brings us to the golden and silver cross indexes. So I'm going to show you the one for the S&P. And this is one of the ways we measure participation. So the silver cross index measures all of the stocks in the S&P that have their 20-day EMA above their 50-day EMA. That's a silver cross in our book. So 94% currently have their 20-day EMA above their 50-day EMA. That's a great foundation. That's what we want to see. However, it is highly overbought. And when you get overbought, of course, to relieve those conditions, typically it's going to take a decline. Consolidation can do it, but typically you look for a decline when you get these really overbought readings. The BPI I'm actually liking right now. I didn't see this one before the show, but we are getting a positive crossover on the BPI. Remember, the BPI measures the percent of S&P stocks that have point and figure buy signals. So I don't use point and figure, but the BPI is a great measure. It just uses the point and figure as how many are on point and figure buys, 82, almost 83%. So good participation right now, right? And we have the golden cross index, the 50 is above the 200 on 97% of the stocks in the S&P. When you have the 50-day EMA above the 200-day EMA, like we do for the SPY, that's showing you a bullish bias. You can start expecting the upside conclusions to bullish chart patterns. Your expectations for upside are, you can go in that direction. You don't have to be as concerned. If your 50-day EMA is below your 200-day EMA, now you have to take every bullish signal and consider it suspect. So right now, we're seeing most of the charts right now in the S&P, 94, 97% with 20-day EMA above the 50 and the 50 above the 200. So that tells you, right, there's a lot of participation going on. But we also measure participation by looking at the percent of stocks above their 20, 50, and 200-day EMAs. So remember, 94% of stocks had their 20-day EMA above their 50-day EMA. Well, of those stocks, only 82% have their price above their 20-day EMA. So that's telling you price has breached the 20-day EMA. So even though we have all those silver crosses, we had started to see this breakdown of participation as far as price not holding the 20-day EMAs. Here we have 91% with price above their 50-day EMA. Remember, we had that silver cross, like I said, at 94%. So that tells you that only a small percentage, only 3% have lost the support at the 50-day EMA. 97% have their price above their 200-day EMA. And if you recall, 98% had their 50s above their 200s. So really, we have a very strong foundation as far as participation is going right now. So these are some of the things that we look at to define participation, because when you have a move to the upside, or if you're starting to look a little toppy like we are now, it's very important to know what kind of participation is going on under the surface. And seeing about, what did I figure, 12% of those stocks with their 20 above their 50, seeing about that 12% breaking down below their 20-day EMAs is a little bit concerning, but not totally concerning. And we all know this is, you're watching this, everybody is expecting the decline. Some of my most bullish friends are now bearish. And they look at me and scratch their head because I'm not completely bearish at this point, but I have to depend on my indicators and what they're telling me. And right now, there's just not that much damage underneath the surface. These are intermediate term indicators. Take a very quick look at that, and then we're going to look at the dollar. So as you can see, again, very mixed readings, up, down, and that is not typical. You can see we're usually very undulating moves that are consistent, and right now we've just been flat and inconsistent. So it's not telling me that much on this chart, except for the fact that we do see these indicators rising today, which is very good. It's the second day of them rising. So I do like that look, especially when we're getting up here at these all-time highs. So I think that the chart's looking pretty good here with participation, but here's another one, right? So of all of those stocks I've been talking about, those 90-something% stocks with their 20s above their 50s, right now, only 53% of the stocks in the S&P 500 have crossover buy signals, meaning their PMO is above the signal line. We only have 53% with their reading, their PMO above the signal line. Just think about that. So we have participation as far as price level and where the price levels are. But when we start talking momentum, we're not seeing the kind of participation we want in this regard. So we have just about half that have a PMO above the signal line. That's just not enough. We really do want to see better participation as far as momentum, because if momentum is flattening out, then price is flattening out, and we're going to have to be prepared for a downside move. Okay. So let's go ahead and look a little bit at the big four, as we call it. And I'm going to start with the dollar, which, like I said, triggered an intermediate term trend model sell signal today. Overall, UUP, which is the vehicle we watch, is mostly unchanged today. You can see just nothing really happened. Consequently, momentum is still falling. The RSI is still negative. And now we get to add on top of that a negative 20, 50-day EMA crossover, or an intermediate term trend model sell signal. Now, sometimes we go into the neutral position, but that's when these crossovers like this take place above the 200-day EMA. If these crossovers occur beneath the 200-day EMA, they're an especially bearish signal, so we want to name it a sell signal, not a neutral as we would if it happens up here. So we've got a huge amount of margin between the 50 and the 200-day EMAs, and now we have this negative crossover. I cannot get bullish on the dollar. I don't know too many people who are, and more than likely we're going to continue to see this decline. We're watching this rising trend line right now, but let's look at the 1-year chart. Okay, here we go. So when I look at the 1-year chart, now we have to figure out where are our support levels. And currently we are sitting just about on this support level at that December low. But really the area of major support becomes closer to the lows here at $24, $24.10, somewhere in there. You could see that there is an opportunity for some support here at $24.40. But overall, with these indicators looking the way they are, negative RSI, declining PMO, we're really not expecting anything great coming out of the dollar. Okay. Let's look at gold. Well, gold, right, should be really enjoying this with the dollar being on such a deep decline and a steep decline. But we're finding that the dollar isn't really cooperating. What a surprise. We lament about it all the time. Gold has a lot of different forces in play, and so it doesn't always do what we feel like it should do. It should have broken above that 200-day EMA, and it didn't. But it is now holding above this support level. So we had marked here, it looked like we had a rising trend channel, but now it's starting to look a little bit more like a rising wedge, and rising wedges are bearish. So the dollar is not doing that well, but gold, for whatever reason, there are other forces, and it's preventing gold from really having that great breakout. But everything here looks very good. You have a rising PMO, you have a positive RSI. We failed at that 200 this last time, but I am of the opinion we're going to get to the 200. We will end up breaking above it. This is just going to be a more, we're going to be grinding out, if you will, this rally on gold. I don't suspect we're going to see any really hot pops to the upside, but I believe that we're also not going to see much in the way of deterioration to gold, because it does have the wind at its back a little bit if we're going to have a falling dollar, and it's going to continue to fall. And right now at this point, I think gold looks good, dollar does not. Quick peek at gold miners. So as you can see, nice double bottom, it's executed, we've gotten the move out, and we have a nice rising trend. Today we did see the gold miners pull back. I've been very bullish gold miners back here. I didn't get in, I'm just kicking myself, of course, but we did rally higher. Now we're digesting it again, and so my expectation is another move to the upside, because we have a positive RSI, the PMO is still rising. Here's your silver cross index. It's not falling, and it's overbought, but not as overbought as it definitely could get. So we're seeing an increase in participation based on the silver cross, based on the BPI, and based on the golden cross. We're seeing a little bit of damage here to price above their 20, 50, and 200s. But ultimately, these are good numbers that can support more rally in gold miners. They're high enough that at least we have them going in the right direction, but we do have to pause, possibly pull back a little bit. But this is going to support a rally in gold miners for it to continue higher. It looks a little suspect right now, but like I said, big move, it needed to digest it. Let's look at USO. Not doing a whole lot here. In fact, I'm going to pull up the 1-year chart, a little bit more interesting here, only slightly. We ended up with a whipsaw sell signal. So we went into that buy and almost immediately whipsawed back into a PMO sell signal. I was of the opinion when we got this breakout, it was just the beginning and we were going to see prices move higher. Well, instead we had to go back down and test support, and it's still kind of meandering sideways at this point. It has, you notice, closed above the 20. So even though it's dabbled below since here, we've been getting closes above the 20. So I think that is positive. RSI looks good. PMO, like I said, in decline, but it's because price isn't doing anything really. So it's going to tend towards zero. I like oil at this point. I'm watching XLE very closely because there are going to be a lot of bargains in there. I just haven't quite found the ones that I like. All right, we'll look quickly here. Here is TLT. And, you know, when you look at the interest rates, the longer term yields, they are in a declining trend now. You can definitely see it here in that thumbnail. So if yields are going to be trailing off, that of course is going to help TLT, similar a reverse correlation there, just like with the dollar and gold. So we do have a rate environment where we're seeing lower rates. And now we're starting to see TLT make that nice move to the upside. However, it's stuck beneath the 50-day EMA. So I do struggle with the idea of getting back into TLT just because we haven't gotten that breakout. Yields are still a little iffy. We have the Fed, of course, this week. So we'll want to watch all of that very closely. But right now, I think it is a bit worrisome that we're not seeing price get above that 50-day EMA for TLT. But everything looks like we should because we have that rising PMO and we do have that positive RSI. And rates are moving lower. All right, so let's look at the two sectors that I wanted to cover today. And the first thing I wanted to look at actually was Nat Gas. Let me see if I have a Nat Gas chart in here. I don't have a Nat Gas chart in here. So let me just pull one up. All right, so UNG, I presented information about UNG last Monday. We are very bullish on UNG. I had notified my subscribers right before we got the breakout on this double bottom. Everything was really lined up. We had a positive divergence on the OBV bottoms. They're rising. The bottoms on that double bottom are declining. So that was a positive divergence. We now have that breakout that is now confirmed that double bottom pattern. The upside expectation is basically to the 200-day EMA. So I believe that we're going to see even higher prices than that on Nat Gas. But I do, for full disclosure, own it. And so I'm going to be watching very closely to see what price decides to do when it gets close to that 200-day EMA. And then I'll be notifying my subscribers of what's going on and when it starts to look a little bit south. And we'll likely want to pull out at that point. We played that game back here. Very successful move. When it started to drop back below that 200, I notified our subscribers. So we enjoyed this lovely move to the upside, but didn't have to partake in the decline that followed. So right now it looks good. I don't think you'd be in here too late necessarily. You can see that UNG is also starting to outperform the S&P. So I like UNG right now. Okay, the other area I wanted to look at was that I saw I do have a chart for renewable energy. All right. So I wrote about renewable energy. I write about it off and on, but I talked to my subscribers about it last Friday. We now have a breakout on renewable energy. It's a breakout from a bearish pattern. We have the flat bottom, declining tops. So the expectation is a drop below that level, the 200-day, but it's held that level and it is bouncing once again. Now, for me, I have been, like I said, I watched this area closely. Every time it started to bounce, I got back in. And I'm a momentum trader, so that means I don't necessarily get in exactly at that bottom. And so this time back here was the third time that I had been burned. So watching for the reversal in renewable energy, I really wanted some seriously good confirmation of what's going on in here. And right now, we're finally starting to get it. We not only have that breakout, but you can see the PMO has just shot up on a buy signal. Every time we had these, you could see the PMO had turned up, but it took some time. Back here, it was right at the top that it finally got that buy signal. This is happening right at the moment of the breakout. And now we have solar has closed above the 50-day EMA. The RSI is just now getting positive. You can see the volume that is now coming in. It's an area that appears to be back in favor. And with tan, now I want to get this inspect tool again. With tan, if we were to get in here and it were to reach at least the expectation of this pattern here that you see, that that drop, that height of this bearish pattern, I would just reverse it and say that the height to the upside is what we're looking for. And that would take us, even if it's just to this level of overhead resistance, that's a nearly 16% gain. So I think this on a short-term basis certainly looks pretty good. All right, and one of the things that I do is I take a 5-minute candlestick chart and I put that on the right side. And so what I want to find out is, where is the best buy point? The best buy points come when you get a PMO crossover on this 5-minute PMO, and the 5-minute RSI is positive. So we know this really was the primary buy point. We're quite a ways from that. But the PMO is not acting like it really wants to go into decline. So I don't know that we're going to get much of a better entry here, but just keep in mind that $91 area to get into tan would be certainly the most profitable if you can get it back down there, but we may not have that opportunity. So I really wanted to look for our diamond of the week from the renewable energy space. So I went in here on StockCharts and I took a look at just some of the top ones that we have here. Fuel cell is one. This one is a beat down renewable energy stock, and it is now trying to make its way back up. It's just now getting above the 200. So we don't really have complete confirmation like we do on tan, right? We have the PMO turning up, but it hasn't given us all the breakouts that we need. Enphase, honestly, I think is looking very good. It has a very similar look to tan, and I think that that's going to serve it well. But right now it's getting ready to test overhead resistance here. And, you know, everything is lined up well. The 5-day just crossed above the 20-day EMA. Look at that really nice move on the PMO. It'll hit positive territory likely tomorrow. And again, here is the performance measures. This one is very important. So despite the group not doing well against the S&P, we can see that it has started to perform quite well against the S&P and its industry group in particular. So this is one of the stronger ones in this area. So I could see this as a diamond of the week, but I think I'm going to be going with TPI Composites. I like the new buy signal. I like that it's already above its 50. And price point wise, if we can get it back up here, that's a 37% gain, and a move here is a 21% gain. So if you're doing something like this, you want to set your stop likely right around that 50-day EMA. So about a 9% stop, maybe looking at about $54.30. But I am making TPI Composites this week's diamond of the week. So that just about wraps it up for me. So I really appreciate you coming by. Don't forget that I am running that special 50% off your first month. Just use the coupon code SAVE50. That's all I've got. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.